Remember those stories where you told, oh, there's nothing that's going to end up coming from gaming? Well, apparently that was a lie because Draftkings is to buy Golden Nugget Online for $1.56 billion as gaming's M&A streak continues. So the key points in this article were written by Contessa Brewer. DraftKings agreed to acquire Golden Nugget Online Gaming for $1.56 billion in stock. Golden Nugget Online shareholders will receive 0.356 DraftKings shares, which is a roughly 53% premium to Golden Nugget Online stock on Friday. And the deal brings 5 million customers into DraftKings ecosystem, which will help boost its lagging iGaming efforts. So let's get right into the story. So the wild spat of mergers and acquisitions in the gambling industry continued Monday as DraftKings agreed to acquire Golden Nugget Online Gaming for $1.56 billion in stock. Golden Nugget Online shareholders will receive 0.365 shares of DraftKings stock, which puts the offer at a 53% premium to Golden Nugget Online shares closing price on Friday. Golden Nugget Online shares surged nearly 48% on the news, while DraftKings stock remained relatively flat after the deal's announcement. DraftKings has a market cap of $20.68 billion, and Golden Nugget Online CEO Tillman Fertitta owns 47% of the business, which was formed by spinning off the sports gaming and iGaming operations of the Golden Nugget. The billionaire said he will continue to hold on to the stock of the new company for at least a year after the deal closes. Fertitta will also join the DraftKings board. So the deal gives DraftKings access to Golden Nuggets Online's 5 million customers who are dependable online casino players. The gaming industry anticipates customers who bet in online casino games will be critical to its future revenue growth. Fertitta and others have said iGaming customers are worth 7 times the value of a sports betting customer. On DraftKings' second quarter earnings conference call, CEO Jason Robins said iGaming provides an opportunity to diversify the company's offering beyond sports seasons. However, it has struggled to win customers to its casino play platform. We definitely feel in the iGaming segment that we do better with people who are sports fans, that we can cross-sell, and we've been working hard to try to extend our brand and extend our reach into the non-sports fan iGaming audience, Robbins said. DraftKings anticipates $300 million in cost savings from the deal as it brings platform and technology in-house, cuts fees to third-party providers, and lowers marketing costs. The company will be able to get promotional and marketing consideration with Fertitta's Houston Rockets, Laundry's restaurants, and Golden Nugget brick-and-mortar casinos. So leveraging Fertitta Entertainment's broad entertainment offerings and extensive customer database, coupled with DraftKings' mammoth network, makes this an unbeatable partnership, Fertitta said in a statement. Together, we can offer value to our combined customer base that is unparalleled. So selling was the only option for Golden Nugget Online, as it only has significant market share in New Jersey and didn't have the balance sheet to compete, said a gaming industry analyst who asked to remain anonymous since they didn't have approval to speak on the record. So DraftKings has been looking to diversify its revenue beyond fantasy sports and sports wagering, and it has struck deals with sports bars, launched a marketplace for non-fungible tokens, and partnered with data provider Genius Sports. The Genius Sports partnership brings official NFL data to DraftKings as well as various other sports and streaming opportunities. Last week, Penn National Gaming announced plans to acquire Canadian sports media and betting powerhouse The Score. And even in brick-and-mortar consolidation is the name of the game, VC Properties announced last week is buying MGM Growth Properties in a $17.2 billion deal that transforms land ownership of the Las Vegas Strip. So economies of scale matter in this increasingly crowded space, said Lloyd Danzig of Sharp Alpha Advisors, a venture capital fund and advisory firm dedicated to the sports betting industry. Companies with engaged user bases, multi-state market access, or proprietary technology will be ripe for acquisition over the next 24 to 36 months. It's the consolidation trend that is likely to shape the future of sports betting and iGaming, Danzig said, as sports betting operators become cornerstones of the broader sports, media, and entertainment ecosystems. So, I mean, it's pretty interesting when you really think about it. Like, this is the thing that you really got to understand, right? It's like, what you could really learn from this type of situation is that online gaming, online gambling, basically anything dealing with any sort of gamification of anything online is getting bigger and bigger and bigger. It's going to get to the point where, who knows, maybe in the next 5 to 10 years, online gambling, like truly 100% gambling online, will probably end up becoming legal, because then that's going to open up basically the whole country up to just straight up gambling like crazy, right? And the amount of revenue that that's actually going to end up generating is insane. That being said, even though this is actually really cool to see, when it comes down to like mastering your money type of situation, because, you know, we talk about finances all the time, if you really want to really master your money, you would actually not be getting involved into any of this at all, right? And so what we mean by this is that the only type of money that you should ever utilize on these platforms is money that you 100% can lose without it affecting your lifestyle. Now, a lot of people do not end up doing that. There's a lot of people who end up getting into this weird gamification of online gambling and end up completely screwing up their lives, right? Because it ends up building like a habit of just tossing your money in there because you think that you're going to win when you're really not going to win, right? So pretty much the only time that you should really ever get involved into online gambling or betting and all that kind of stuff, right, is basically after you're out of debt, after you have an emergency fund, after you have money starting to invest automatically. After that point, then you can like partake in something like this, because you know like 99% of the time you're basically going to be losing your money. It's almost like a guarantee that you're going to be losing your money, right? So just keep that in mind. It's basically like buying a lottery ticket. Like, it's like a surefire way to lose your money. Yeah, technically speaking, you could technically make money, but in the grand scheme of things, you shouldn't personally really get like involved in something like this, because you could end up losing a lot of money. Like, the only people that really make money in this type of things are these companies, right? These massive companies. They are the really only ones that truly make any real returns on this, right? Because like, it's going to be like a high margin business, right? And the long-term value of each customer is in the thousands, if not like tens of thousands, if not hundreds of thousands of dollars, right? So just keep that in mind. It's a very addictive habit that could go downhill very quickly. So keep that in mind. Be careful with your money. And if you need help with mastering your money, which means getting out of debt, building an emergency fund, and starting to invest, go check out 14bucks.com to learn the secret to mastering your money.